You hear the news of these election results where the left got battered, and then we heard the news about French public deficit as well.
Absolutely. We've been hearing a lot of things when it comes to the state of the French economy this Monday. This as we are still digesting those results from the local elections, Francois. And we in business are watching closely who will become the next Prime Minister, just as you are in news, and also who will become the new Finance Minister. This as the French economy is, of course, one of the main challenges ahead for the new man or woman in charge of France. The Prime Minister, that is. The French government is seen to be facing an uphill battle to rein in its deficit to agreed levels. The government overshot last year's target, according to the National Statistics Office, the INSEE. France had pledged to cut the deficit to 4.1%, but only managed 4.3% in 2013. The French government wants to cut the deficit to 3% by 2015, in line with European Union targets. But as I say, it's looking like a tall order the further we come towards that target. We've got some other data coming out from the Eurozone this Monday as well. There's fresh pressure on the European Central Bank to do more to boost the Eurozone economy. It comes after inflation in the countries that use a single currency came in at just 0.5% in March. That figure was lower than expected, and it is fueling fears that the Eurozone is heading for deflation. The ECB's own target rate when it comes to inflation is at 2%. There are calls for the central bank to ease its monetary policy to get closer to that figure, and Mario Draghi and all of the other ECB officials, they will be coming together on Thursday in Frankfurt. We're going to take a look at the stock markets and at how they've been digesting all of this news this Monday. In Europe at the close, the main indices were in negative territory, but not by much, at least not when it comes to the London FTSE, which was down around about 0.25%. The Paris CAC 40 and the Frankfurt DAX harder hit. We did see other stock indices across Europe, though, trading higher on the news that of that inflation rate, rather, as the speculation is that the ECB will come out with more stimulus measures. Let's also talk you through the United States and the picture over on Wall Street. We saw a little bit of a pop earlier when Fed Chief Janet Yellen said that U.S. interest rates would stay low for some time yet. And as you can see here, the Nasdaq is still up by 1.3% this hour. So it seems as if Janet Yellen's comments proved a boost to the markets. We're going to stay with some market-related news now. Both the Turkish lira and the Turkish stock market gained this Monday. It came after the party of Prime Minister Recep Tayyip Erdogan swept Sunday's local elections. The AK party's resounding victory seemed to ease market concerns over instability. A corruption scandal and widespread protests have sparked questions over the government's future. Prime Minister Erdogan's response is also seen to have worried foreign investors. Analysts say the local election results bring some clarity, but that some question marks remain.
Foreign investors have some concerns. They do not know if there is a country, this is a country where people cannot have freedom of speech, freedom of expression, I should say. They would wonder how to invest in this country.
OK, we're heading to Japan next. There are fresh concerns. The third largest economy in the world is slowing down. A fresh batch of figures shows that factory output was down by 2.3% in February. There are also concerns that a sales tax hike will undermine consumption looking ahead. It's just come into effect over in Japan, and Jennifer Lush has more details.
Spending up big before the new sales tax kicks in.
It doesn't make sense to wait, knowing things are just going to get more expensive.
On April 1st, Japan will see its value-added tax rise for the first time since the late 1990s. It'll go from its current 5% to 8%, then potentially rise again to 10% by October 2015. Prime Minister Shinzo Abe is touting the move as a turning point for Japan's troubled economy. Since the country's financial and property bubbles burst, government spending has leapt while tax revenues have stagnated. Topping 1 quadrillion yen, Tokyo now has the highest national debt in the rich world, twice the size of its entire economy. Abe says the hike is necessary in tackling this spiralling debt and is the next phase of Abenomics, designed to introduce structural reforms for long-term growth. But economists fear the increase will throttle domestic consumption, which accounts for 60% of GDP, killing off recovery completely.
After the tax hike, demand will drop suddenly. A common practice among companies in this kind of situation is to put new products on the market to minimize the effects of the sales drop.
Yurutaro Hashimoto was the last Japanese leader who dared to raise the consumption tax. The economy tanked and he was forced out of office by an angry electorate. Hoping history won't repeat itself, the government plans to placate those struggling in the wake of the increase by offering one-off cash payments to low-income households and home buyers.
OK, let's talk you through some other stories that we're watching for you this Monday. In Greece, ferries remain anchored in the country's biggest port, Piraeus. This as sailors are on a 2-day strike, saying they haven't been paid for months. They're also opposed to a range of reforms passed by the Greek parliament late Sunday. The reforms are seen to be clearing the way for an €8.3 billion tranche of loans from the European Union and the International Monetary Fund. The German flag carrier Lufthansa has cancelled 3,800 flights later this week. This as the airline's pilots are planning on a walkout on Wednesday, Thursday and Friday. The pilots are protesting over plans to scrap an early retirement deal. Lufthansa says it will only be able to carry out around 500 flights between Wednesday and Friday, and it warns the strike will cost it tens of millions of euros. And Libya's sovereign wealth fund is suing the French bank Société Générale for €1.1 billion. The fund manages Libya's oil revenues and it accuses the bank of bribing an ally of Muammar Gaddafi's regime. The fund says he then pushed for investments that led to significant losses. Société Générale denies the allegations and calls them unfounded. OK, with that, I'm going to hand it back to Francois for the rest of the news. Francois.
All right, many thanks. Marcus Carlson will be back later with more business news. Let's say hello to Kedevan Gorgeous. How are you?